Every summer seems to bring a new round of layoffs on Wall Street, and this year is shaping up to be no different. Companies see shrinking profits, also an uneasy recovery. Our next guest has seen this all before and says that firm hired too many people last year. We're joined now by Russ Gerson. He's the CEO of the Gerson Group, an executive recruiter for the financial industry, and you were named one of the world's most influential headhunters in 2008 by Business Week. So thank you for joining us and giving us your perspective. Russ, it seems like whenever we talk about Wall Street hiring and firing, we're talking about the same cycle. They overhire and then they have to overfire. Don't they ever learn?
No, they don't seem to. Wall Street, in active markets, tends to hire more people than they actually need. And then when things start turning down, they actually let go more people than they probably should.
So how is it different this time, or how did it play out this time?
Well, this summer is not terribly different than the typical Wall Street summer where Wall Street culls its bottom performers. This summer it might be a little bit more aggressive because the high margin proprietary products no longer are supplying the kind of profitability that they have in the past. So the margin for error isn't as high, so they're probably being a little bit more aggressive in their cutbacks this summer.
Are we talking about a lot more people then as a result?
Not a lot more, I would say slightly more, and particularly in the sales and trading sections as opposed to investment banking.
Okay, how about the regulation that's out there, the pending regulation, the capital rules coming out of Basel? How is that affecting the hiring and firing practices of banks?
Well, to my earlier point, some of the proprietary trading-driven products are going to be affected by Dodd-Frank and also in terms of capital requirements. So the banks are not going to be able to achieve the same kind of margins they've had historically, so they're going to have to let more people go.
What about other kinds of companies in the financial industry? Insurance companies, we hear, do have some pricing power. How about custody banks? Are they in a better position then to hold on to the talent that they have attracted?
Yeah, I think the more stable or traditionally more stable organizations aren't going to be affected by the same types of gyrations that the Wall Street investment banks tend to face.
What are you hearing from the banks out there that are firing but still are looking for the perfect candidate? Who do they want?
Well, on the investment banking side of the business, they want people that are high impact, that have relationships, that can really move the needle. On the sales and trading side of the business, they want people that are thoughtful, intelligent, and can produce big profits. It's the same thing it's always been on Wall Street, and the summers are when they call the lower performers. Okay,
in the meantime, you were saying earlier that you're seeing a lot of demand for employees in places like Asia.
Yeah, no, the Asian markets are doing actually quite well right now. We're seeing hiring in Hong Kong, we're seeing hiring in Shanghai, we're seeing hiring in Australia. So the Asian markets and also some of the emerging markets like Brazil are quite active right now.
All right, so look for hiring in the Asia Pacific markets. Thank you so much. Russ Gerson, CEO of the Gerson Group, an executive recruiter.